Hello traders, this is your favorite FX coach, Stiletto Pips here. And in this video, I will be sharing with you how to effectively manage your trades so that you can minimize risk as you are securing the bag. And so we're going to get right into it. What you're looking at here is a chart of the US 500, and this is the daily time frame. And so what you're going to notice here is that I have two moving averages. So it is said when you're utilizing two moving averages, you want to have a smaller one, which is a faster moving average, meaning a low number. And then you're going to have a bigger one, which is a high number, and it tends to move slower, okay? And so when you see that your faster moving average, I'm going to say the green one here is our faster one and the yellow one is our slower one here. And so when your faster one crosses above or below, that is the direction or the trend you want to utilize in having a high probability trade, okay? So in this case, we have an ascending trend. That means the market is bullish. It is going up, traders. It is going up. And so let's say that you were in the trade right here, okay? Let's say you got to your station, okay, or wherever you trade at, and you saw this red candle here, right? You would not have wanted to participate in this trade unless you are a counter trend trader. But for today and for the purpose of this video, we're talking about trend trading. So we're going to keep our focus on the dominant trend. And so in this example, we would not be trading right here. We would sit on our hands and wait for an opportunity to go back in the dominant direction of the trend, okay? I am using Heikin Ashi candles. These are trend trading candles, okay? And so it's very easy to trade when you're trading with Heikin Ashi candles, because all you have to do is what? Follow the money or follow the color of the Heikin Ashi candle that is moving in the dominance direction of your trend, or the dominance direction of your trend, because we are trend trading in this video example, okay? And so right here, I'm going to use a vertical line, and I'm going to place it right here on this candle. So what you would have done real time if you were trading this, trader, is that you would literally look to see look for a price to actually close back in the direction of the dominant trend. And so this candle right here, when it closed, that was your key to wait for the next day to enter your trade right here at the bottom of this candle when it opened. So in essence, you would have been entering the trade right here off of this candle. I'm going to make it a green dotted line so that we can mimic real-time action. I'm going to make it green. Okay. And so this would have been your entry candle right here, right there. Let me highlight this for you, okay? Right here. That would have been your entry candle, okay? Your stop loss. Okay, where could you have placed your stop loss? I probably would have placed my stop loss either at the previous candle. All right, so let me remove this out of our way since we know what we're going to be entering at. My previous candle would have been this candle right here, or the current market structure would have been the previous low, which would have been right here. So me, advantageously, I would have probably put my stop loss mostly right here. Let me move my entry line. Got to close that. My stop loss would have been right here at the low of this candle, okay? And so I'm going to make this red so we can mimic real-time action of what would have taken place. All right, so here's my stop loss. So this is how you can effectively manage your trade to minimize risk as the trade is going in your favor or not, right? So every day, right, I will come to my screen to check to make sure that my D1, my daily time frame candle, is still moving up in the direction of the trend, which is up, right? So in this case, because I entered on this trade right here, right? I mean, not this trade, because I entered on this candle right here on this day right here, I would just simply move my stop loss up where? To this candle right here, right? to the previous candle from my entry candle, right? And that was on the opening of this new day where my mouse is pointing right here. Okay, this is the candle I entered, and this was the previous day before my entry. So I will place my stop loss there. Now on this candle, when I get the next day, when I get a new candle, I will simply move my stop loss where now it will be above this candle, right? Now my trade is risk-free. Every day the candle moves in my direction, trader, I am simply moving it up, right? This day, moving it up. This day, moving it up to the next candle. This day, moving it up. So in essence, look what I'm doing, trader. I am 2 candles behind the current day. So on this day, when the candle closed, okay, which would have been right here, when this candle closed red, I would have actually taken profits, right? Or simply move my my stop loss up to the next candle if I wanted to stay in. But I'm moving in and I'm locking in profits along the way. As you can see, this candle right here, after this candle closed, it closed in the sell, but it never came back and took me out because of my stop loss right here. It never took me out. It went back into the dominant direction of the trend. So when it did that, I could have stayed in, or when this candle closed, I could have taken my profit. So how many pips would I have actually profited if I would have taken my profits on the close of this candle right here? Okay, let's see. Well, I enter right here and my stop loss is now there. I would have actually profited 100. What is this? I would have profited 103 pips, traders. 103 pips. Okay, 103 pips. And let's say I wanted to continue. I didn't take my profit. Let's say I stayed in right there because price never took me out and I got a candle going back into the direction of the market. Guess what I would have did? I would have put my stop loss at this candle now, right? Now, this candle, it stayed in. It stayed in. I would have just kept moving it up, moving it up. This candle, I'm still in, moving it up some more, right? This candle here would have been my candle to take me out. Now, because I stayed in and allowed the market to take me out, now I've actually profited 125 pips. Traders, that is an effective way to manage your trade once you enter, to be able to minimize risk and hopefully secure some profits as the trade and the market is going in your favor. Again, you may want to watch this video more than once to get the concept, but my name again is Stiletto Pips. I am your Pip coach, the Pipologist, and I will see you on my next video. And until then, happy trading.